Americans for Fair Taxation presents the Weekly Chairman's Report, written by Steve Hayes, president of Americans for Fair Taxation, and recorded by Bob Paxton, a volunteer with the Florida Fair Tax Educational Association. And now, this week's Chairman's Report.
Hello, I'm Bob Paxton with the AFFT Chairman's Report for Friday, February 6, 2026. How federal taxes inflate the price of everything you buy. Now, when you buy things at any store, your receipt shows you line by line the price of every item you purchased. Those amounts are added together to arrive at a subtotal, and then you see the sales tax that's added to that subtotal to arrive at the total that you're charged. But if you think the amount on that tax line shows you all the tax you're paying on that purchase, you would be very wrong. What your receipt doesn't show you is that subtotal figure is already carrying a heavy, invisible tax burden. Long before a product reaches the shelf, a complex web of federal income and payroll taxes has been woven into its price. Economists call this the hidden tax wedge. From the farm to the factory to the final retail point of sale, every hand that touches a product adds a layer of federal tax cost that the consumer ultimately pays. Now, in the United States, we believe that the price of a gallon of milk is what the farmer and the grocer need to cover their costs and make a profit. Well, that's true. But what just about everyone fails to consider is that federal income and payroll taxes are part of those costs. Federal taxes, including corporate income taxes, pass-through taxes for small businesses, and the employer's share of payroll taxes, are treated by businesses as operational costs, no different from electricity or rent. They're all costs. And to stay in business, firms must pass these costs forward. Now, it's hard to see the difference made by increases in federal taxes, but recent empirical research by the National Bureau of Economic Research suggests that for every 1 percentage point increase in the corporate tax rate, retail prices can rise by as much as 0.24%. Now, to understand how much the federal income payroll tax system secretly adds to your receipt, let's look at the accumulation of these tax costs at every node of production. First, there's the raw materials. The journey begins at the farm or the mine or the producer of the raw material. Now, most American farms are pass-through entities, meaning the owners pay a self-employment tax, which is a 15.3% levy on all net earnings. Now, according to USDA data, the farm share of every dollar spent on food is about 14.9 cents. Now, while small, the taxes paid by the farmer on labor and fuel, including federal excise taxes, are included in that 14.9 cents. Then there's the manufacturing step. Now, manufacturing is where the value added is highest, and thus where the income payroll tax wedge is most substantial. Manufacturers and most businesses operate on achieving a specific rate of return. So if a factory needs, say, a 10% profit to satisfy its investors, a 21% federal tax means they must aim for a 12.6% gross margin. So instead of increasing prices by 10%, the price to the next person or entity in the supply chain is increased by 12.6%. This same math is used by each subsequent person or entity in the supply chain. Then there's logistics and wholesale. Before it hits the store, your product moves by truck or by rail. Now, this sector is labor-intensive and has a low profit margin. These firms pay the 7.65% employer payroll tax on their employees, and they almost always pass 100% of this cost on to the retailer or the next person or entity in the production cycle. And finally, there is the retailer, which is the final tax collector. Now, retail is the largest private sector employer in the United States, meaning that payroll taxes are a massive overhead. Research into supermarket scanner data shows that labor cost increases, including the taxes paid on those wages, are passed through to food prices almost dollar for dollar. Now, beyond the taxes themselves is the cost of complying with a tax code that's so incredibly complex that no one on earth fully understands all of it. Businesses spend billions of hours and billions of dollars annually navigating the Internal Revenue Code. According to the latest analysis from the Tax Foundation, the total economic cost of tax compliance in 2026 is estimated between $536 and $546 billion. This figure represents roughly 1.8 to 1.9 of the U.S. gross domestic product. The National Taxpayers Union Foundation divides this burden into two primary categories. First, there's actual out-of-pocket expenses totaling $148 billion. Now, these are the direct payments for tax preparation software, professional CPAs, and legal services. And then there's the time and productivity loss, worth $388 billion. That's the monetized value of the 7.1 billion hours that Americans spend on record keeping, researching rules, and filing forms. The Small Business Administration says that there are nearly 36 million small businesses in the United States. They contribute 43.5% of the total U.S. GDP and create 46% of the private sector jobs. Now, unlike large businesses, these small businesses don't have their own accounting and legal staff. They have to hire outside professionals to ensure that their taxes are done correctly, and they must include these costs of compliance in the prices of the goods and services they produce. So, when you aggregate the corporate income tax, the employer payroll tax, and the compliance burden, the cumulative embedded federal tax in retail prices is estimated to range between 15 and 25% of the final shelf price. That means that for every $100 you spend, between $15 and $25 is effectively a federal tax payment that never appears on your receipt. While the U.S. is often perceived as a low-tax jurisdiction compared to Europe, Federal Reserve research suggests that our system of embedded taxes functions remarkably similarly to a European-style value-added tax. It's just that in America, the tax is kept off the books and hidden in the price of bread, gas, clothes, and everything else you buy. So by the time you pay that visible 7% sales tax at the register, the federal government has already taken its cut, one supply chain link at a time. Now, the total cost of federal tax compliance is currently 23 times larger than the annual operating budget of the Internal Revenue Service itself. Let that sink in. In conclusion, the $546 billion compliance burden reflects a significant deadweight loss to the American economy. If the 7.1 billion hours spent on tax forms were redirected towards innovation or labor, the long-term growth of the U.S. economy would be substantially higher. Despite digital filing advancements, the hidden tax of complexity continues to grow faster than the technology designed to manage it. Now, while all alternatives to the income payroll tax system need to be carefully examined, it's clear that the best alternative is the fair tax, a national retail sales tax on new retail goods and retail services. It provides a family credit so that all purchases up to the poverty level for each family are not taxed, and there's no withholding from your paycheck. You never have to file a tax return again telling the government how much you earned and how much you spent, and you'll never ever be harassed by the IRS ever again because the fair tax abolishes the IRS. Now, many of you have labored tirelessly for freedom from the federal income tax and the IRS. You deserve a great deal of credit for your efforts to educate the American people on the need to fund the American government in a way that's good for America and that returns freedom to the American people. It's imperative, though, that we don't replace the current income tax and the IRS with an alternative system that can still be manipulated by the ruling elite. We must let Congress and the President know that the best way to replace the income tax and the IRS is with the fair tax. Now, make no mistake about it. The fair tax is a grave threat to the ruling elites. It will strip them of their power and their ability to control us through the tax system. Their opposition to the fair tax will be fierce and unrelenting, and don't think for an instant they won't use half-truths, deception, and downright lies in their desperate attempt to hang on to their power. However, with the support of this president, we can finally eliminate the income tax and the IRS. Now, of course, the best course of action is not only to repeal the income tax and abolish the IRS, but to repeal the 16th Amendment as well so that no future administration can ever shackle the American people with an income tax again. We must come together and ensure that real tax reform, the fair tax, is not subverted by the elites in D.C. This will take the diligent efforts from all of us. We need your financial assistance, and we need your grassroots assistance. Now, if you have contacts that will allow us to get more information about the fair tax to President Trump, please let us know. Also, please email us at info@fairtax.org, and we'll give you some options on how you can best help us. At a minimum, please call your congressional representative and ask if he or she supports the fair tax. If so, thank him or her for their support and suggest they become a co-sponsor of H.R. 25 if they're not one already. If not, ask why not. Now, if your representative claims to be unfamiliar with the fair tax, offer to have someone come to their office and explain it to them. The solution: pass the fair tax. Now, why would D.C. pass the fair tax and give up an almost unlimited source of donations? Well, they won't, at least not voluntarily. The only way they will is if the rest of us demand it. Isn't it time to end this ludicrous tax collection system in the IRS along with it? Help bring about real tax reform and stop future IRS abuses. By contributing, or actually investing, $10.40 a month, you help provide a financial base to Americans for fair taxation. Now, if you can make larger contributions/investments, these will be used not for salaries, as we're all volunteers, but for the needed updates to our economic studies, which will be vital for all future years. Please go to fairtax.org to invest in AFFT and help us pass the fair tax. It's an investment in your and your family's future.
This has been the Weekly Chairman's Report, written by Steve Hayes, President of Americans for Fair Taxation. Check back every week for news and information about the fair tax, and learn why the fair tax should replace our antiquated federal income tax system. If you'd like to receive a copy of the Chairman's Report in your inbox every week, sign up at fairtax.org.